In this video, I'll show you how you can easily calculate the deductible portion of your mortgage interest. This is a spreadsheet that I made in Google Sheets. I'll put a link in the description so you can access it yourself and input your own calculations. This is for mortgages that originated after December 15th, 2017, and that's when a new tax law went into effect. And that tax law set a limit on the amount of principal balance in which the interest is deductible, and that limit is $750,000. So the spreadsheet's easy to use. You'll start by putting in a starting and then ending mortgage balance. Now, if you're using a 1098, you can look and it'll show you the beginning principal balance and the ending. You can look at the first mortgage statement of the year and then the last mortgage statement of the year. Or if you purchased a home, let's say in the middle of the year, your starting balance will be whatever is on that closing statement that you got from escrow. So you'll put in that starting balance, then you'll put in the ending balance at the end of the year. And this shows how much principal is left over. So we, as an example, have $750,000 as our starting balance. Let's say at the beginning of the year, there was $750,000 of principal. At the end of the year, $740,000. We only paid down $10,000 principal. That, of course, creates our average loan balance, which is needed to calculate how much interest is deductible. So we don't put anything on line B5. The last and only other figure, this third figure, is how much interest. And you can see that on the 1098. You can calculate it on your own. I just wrote in an arbitrary number as a sample. So we're pretending that it's a loan that I started with $750,000 principal in the beginning of the year, ended the year with $740,000, and I have $30,000 in interest that I paid. How much is deductible? Well, remember how I said there was a limit of $750,000? Since we're under that limit, all of it's deductible. So it shows you that you can see the same number here on line 8 of my deductible interest matches because our mortgage balance is under that limit of $750,000. But what if it's higher? So let's just put in a new number. Let's say we start with $900,000 and at the end of the year we paid down $50,000 in principal. So now our ending balance is $850,000, but we still paid $30,000 in interest. Well, you can see that here, even though we paid $30,000 in mortgage interest throughout the year, only $25,710 is deductible. And you can see that once you're over $750,000 in terms of an average loan balance, you can see that a smaller and smaller portion is deductible. So let's say we have a mortgage of 1.1 and we paid it down to just $1,050,000. Okay. And let's say we paid that same $30,000 in mortgage interest. Well, you can see only $20,940 is deductible. So roughly 2/3 of what we paid is actually deductible. So I'll put a link in the description and you can play with this calculator yourself. Hopefully you find it helpful. Thanks for watching.